Hey everyone! The word on the street is that SoFi is the future of finance, a super app that's totally disrupting the banking industry. The stock price is going through the roof, and investors are ecstatic. But here's the big question. Is this optimistic story the real deal, or is it all just a mirage? Welcome to our debate. Our goal is to break down all the market myths and challenge the conventional wisdom. We're here to help you find a clear path through all the fog. So, without further ado, let's get right into it. Please give a warm welcome to Mr. Market.
Hey everyone, thanks for tuning into this debate on whether SoFi is the future financial super app transforming banking. I'm here arguing yes, and I'll kick things off by breaking down what SoFi does and how it makes money. First off, SoFi is a digital finance powerhouse that started with student loans but has grown into a one-stop app for everything money-related. Think banking, investing, lending, insurance, and even crypto, all in your pocket. No brick-and-mortar branches, just seamless tech. On revenue, they're pulling in a record $858 million in Q2 2025, up 44% from last year. It's split roughly like this. About 50% from lending like personal and home loans, about 40% from financial services like checking accounts and investments, and about 10% from their tech platform that powers other companies' finance tools. Profits are booming too. They hit GAAP net income of $97 million in that quarter, with margins improving across the board thanks to smart cross-selling and low costs. Now, why is SoFi a buy and the future of banking? Let's talk competitive edges. Unlike old-school banks bogged down by branches and paperwork, SoFi's fully digital, no legacy costs means they innovate faster and offer perks like 4.50% APY on savings, zero fees, and early paychecks. That's huge for everyday folks tired of traditional banks charging $5 to $35 monthly. Their moat? A full banking license. They're among the first fintechs to get one, letting them fund loans cheaply with $29.5 billion in deposits. Plus, their Galileo tech platform serves over 160 million accounts worldwide, creating sticky revenue that competitors can't match easily. Looking ahead, SoFi's potential is massive. They've grown members to 11.7 million, up 34%. And they're launching crypto trading and AI tools in 2025. In a world where people want everything in one app, SoFi's ecosystem locks in users. 35% of new products come from existing members. Traditional banks are struggling with digital shifts, but SoFi's already there, targeting tech-savvy millennials and Gen Z. Bottom line, they're not just competing, they're redefining banking for the future. Over to you, opponent.
Thanks for that breakdown. My opponent paints a very rosy picture of SoFi as a digital giant, pointing to impressive growth and a slick app. And I won't deny it, SoFi is a strong digital bank. But a fast-growing company isn't the same as a transformer. And a super app that can't handle basic banking needs isn't so super after all. I'm here to argue that SoFi is not the future of banking, and the hype is overlooking some serious fundamental flaws. First, let's talk about that one-stop shop claim. It sounds great, but in reality, it's full of holes. You can't walk into a branch to deposit cash. You can't get a cashier's check on the spot. Many users still need a second account at a local bank for these basic services. Their investment platform is still playing catch-up to the big players, and even simple things like joint accounts have frustrating limitations. It's a convenient app, but it is not a full replacement for the banking system we already have. Second, my opponent calls their banking license a moat. I call it joining the club they were supposed to disrupt. By becoming a chartered bank, SoFi now faces the same heavy regulations, compliance costs, and risks as the old-school banks they criticize. They're no longer a nimble disruptor, they're just another bank, funded by deposits and making money off loans. That's not a revolution. That's a business model that's been around for 500 years. Finally, let's not forget who they're up against. My opponent says traditional banks are struggling, but giants like JPMorgan and Bank of America are pouring billions of dollars into their own digital apps. They have something SoFi is still trying to buy: the trust of hundreds of millions of customers built over decades. So, while SoFi is growing fast, it's not transforming banking. It's simply a digital player in a very old game, with limited services and giants for competitors. Thank you.
Thanks. My opponent raises some valid points, but they represent an old way of thinking about banking. Let's tackle them one by one. First, the idea that SoFi isn't a one-stop shop because it lacks physical branches is missing the point entirely. That's not a flaw. It's the entire business model. By not wasting money on expensive real estate and tellers, SoFi can pass those savings directly to customers. That's why users can access competitive rates, such as up to 4.5% APY through promotions, while big banks give practically zero. And for the rare times cash is needed, SoFi has a partnership network for cash deposits. It's a modern solution for a modern world. The argument that it's not a full replacement is like saying Netflix isn't a replacement for Blockbuster because you can't rent video games there. The world has moved on. Second, my opponent claims the banking license is a burden. I see it as a superpower. Before, fintechs had to partner with old banks, paying them for the privilege. By becoming a bank, SoFi controls its own destiny. It funds its own loans with its own low-cost deposits, which now stand at over $29 billion. This isn't joining the club. It's building a better club with lower fees and better technology. It combines the agility of a tech company with the stability of a regulated bank. That's not a 500-year-old model. It's a model for the next 50 years. Finally, the idea that giants like Chase are going to crush SoFi. They are spending billions, yes, but it's to patch up a sinking ship. Their tech is built on decades-old systems, and their departments don't talk to each other. SoFi's advantage is its financial services productivity loop. A single integrated platform where adding one customer to one product makes it almost free to sell them another. That's why 35% of new products are bought by existing members. So, while my opponent sees limitations, I see a lean, efficient, and integrated machine that is rapidly winning over the next generation of customers. That is the definition of transformation.
My opponent talks about a superpower and a better club, but I think we need a reality check on what's really happening here. First, let's address that Netflix analogy. Banking isn't a movie rental service. It's an essential part of people's lives. And that partnership network for cash deposits? It's often a clunky workaround that comes with its own fees and limits, which completely undermines the no-fee marketing pitch. The high interest rates sound great, but they are a classic customer acquisition strategy. It's a costly way to get people in the door. The real question is, are those rates sustainable, or will they disappear once SoFi needs to focus on actual long-term profitability? Second, this idea that the banking license is a superpower. It's actually a double-edged sword. Yes, they can use their $29 billion in deposits to fund loans. But let's put that number in perspective. Bank of America has over $1.9 trillion in deposits. SoFi isn't building a better club. It's a small boat floating next to an aircraft carrier. And by becoming a bank, it has invited all the same risks and heavy-duty regulations onto its small deck. That's not agility. That's vulnerability. Finally, my opponent praised their productivity loop, saying 35% of new products go to existing members. Let's flip that number around. That means 65% of their growth comes from acquiring brand new customers, which is the most expensive way to grow in a crowded market. They are spending a fortune to buy each new user, while giants like Chase, who are not sinking ships, are updating their own world-class apps and have millions of loyal customers already. So, SoFi isn't a transformer. It's a small digital bank using expensive marketing to fight giants, all while playing by the very same old rules. Thank you.
Thanks for the lively debate, folks. My opponent calls SoFi a small boat next to giants, fair enough. But remember, David beat Goliath with a smarter sling, not a bigger rock. Those high rates? Not just bait. They're sustainable perks from SoFi's lean model, pulling in users who stick around for the full super app ride banking, investing, crypto, all in one seamless spot. Sure, Bank of America has trillion-dollar deposits, but SoFi's $29 billion is growing fast, funding loans without the bloat. And that's 65% new customer stat? It's not a weakness. It's proof of explosive appeal, with members hitting 11.7 million, up 34%, and revenues soaring 44% to $858 million. Their Galileo platform powers 160 million accounts globally. That's not playing the old game, that's rewriting the rules. In the end, while big banks patch rusty ships, SoFi's building a rocket. It's not hype. It's the future, efficient, integrated, and ready for liftoff. Thanks.
My opponent is a big fan of metaphors. We've heard about David and Goliath, rusty ships, and now a rocket ship. It sounds very exciting. But let's be honest for a second. Rockets burn an incredible amount of fuel, and historically, a lot of them don't make it to orbit. I, for one, would rather trust my life savings to the rusty old ship that has safely navigated every economic storm for the last 100 years. That rocket fuel my opponent is so proud of, it's the expensive marketing gimmicks and high interest rates SoFi is using to buy new customers. It's not a sustainable lean model, it's a cash-burning engine. Let's wrap this up with the simple truth. SoFi is a good digital bank with a slick app, but it has not transformed banking. It has simply joined the banking industry. It now has to follow all the same rules and face the same giants. So, while they may have built a very shiny, very modern boat, it's still floating in the same old ocean. This isn't the future of banking. It's just a new coat of paint. Thank you.
All right, over to you, judges. What do you all think? Do you agree with Mr. Market's take on things? I can't wait to see your votes and thoughts in the comments section. We love hearing what you have to say, and I truly believe every perspective has its value. Also, just so you know, I've done my best to fact-check all the information you heard earlier, and you can find the relevant links down in the description box below. Before you go, don't forget to hit that like button and subscribe. Your support really means a lot to us. We'll see you next time. Bye-bye.